One of the fastest shifts in history. Family offices now loading up on stocks and souring on private equity. Robert Frank joins us with new data, coincidentally from UBS.
Exactly. Well, according to UBS, family offices increasing their allocation to stocks to the highest level in years. The private investment firms for wealthy families, typically worth $100 million or more, they're planning to boost stocks to 29% of their portfolios from just 26%. Now, last year, American family offices were even more bullish, with stocks at 32%. That, according to a new report from UBS.
Most people were anticipating some sort of volatility, along with a lot of new technologies and new advancements in the markets as well. And so if they have the opportunity to move quickly, public markets gives them to do that.
Now, at the same time, family offices trimming private equity, going to 35% from 27%. Those moves marking a sweeping reversal for family offices, which had been moving to private markets from publics. Now, family offices also staying very close to home with their portfolios. They have 86% of their investments in the U.S. That compares to a global average of 53% invested in the U.S. Now, UBS saying family offices invest in what they know, and of course, the U.S. markets have outperformed the rest of the world in recent years. Now, to see all the investments of today's family offices, you can get my Inside Wealth newsletter. That's at CNBC.com/InsideWealth, CNBC.com/InsideWealth.
Think of what it means. I mean, initially there was a lot of bullishness on, we knew taxes on corporations were going to stay low, taxes we're going to know what they are, deregulation, Doge, but then April 2nd comes along.
I think there are two things. One is that private equity is less attractive because, as you guys have been talking, Andrew knows well, there are no exits. So when you're not getting money out of your investments in private equity, you're not going to put more money in. On the stock side, family offices, the number one investment theme for family offices is AI. Now, it's very hard to get in the funding rounds for the big AI companies like OpenAI or Anthropic. Right. So if your big theme is AI, the only way to get that exposure is in the public market. So those are the two drivers.
Well, you didn't come in and say money markets or that family offices are all buying money market funds or short-term.
They're not. In fact, they're getting out of cash. They had been building up cash for years, and it's the first time we've seen in 4 years that they're actually moving cash out of their cash holdings or cash equivalents and into stocks.
When is this data run through? Because markets are up a lot this past
Very good point. And also, it was right up through the sort of beginning of the tariff. So it was all the interviews and the surveys were up through beginning of April.
Because I would guess they would deploy money in April, maybe not in May.
Absolutely. Things are changing so fast, so we will give you an update on what we hear when we get the next one.
Yeah.
You know anyone who has a family? I don't.
I do. I talk to them all the time, all day.
You don't.
I don't have a family office.
Huh?
Yeah, we have some of them in here.
No, I know. I know some people, but I mean, they're not people I hang out with.
It used to be you had to have a minimum.
I'm saying I want one.
It used to be you have to have a minimum investable assets of $100 million or more for it to make economic sense. Now it's about $200 million or more. So that's an investable asset.
They moved the goal.
They moved the bar. The bar's always going higher.
Wouldn't matter. Really wouldn't matter.
You can start one anyway.
Huh?
You just start one anyway.
Start one.
Yeah.
I thought you just said it was minimum.
Well, you could still have a business card that says the Joe Kerner family office.
Do it in renminbi.
That's true. You can do that, or even crypto.
There you go.
I think I have 100 billion renminbi. Maybe not.